Hello and welcome back to Dukascopy TV for Monday's Targets in Focus. Today I'm joined by Arne Lohmann Rasmussen, Chief Analyst at Danske Markets, to discuss his outlooks for the euro NOK, euro dollar and Aussie dollar. First of all, Arne, how is the euro against the NOK performing at the moment, and what are the main elements affecting its performance?
We have over the summer we have seen the NOK performing quite well against the euro, but it seems like some of the performance has run out of steam lately. And what is the driver behind the NOK? First of all, the Norwegian economy is actually doing quite well. We had strong growth in Q1, up 1%. Oil prices has been recovering. Oil investment in the Norwegian economy, they're quite strong. So the economy is sort of fueling on more or less on all cylinders. Also, the housing market is quite strong. And then we have seen something we haven't seen before, actually, that the NOK has actually attracted quite a lot of safe haven flows, in our opinion. It does not longer react as a traditional cyclical currency. So the ups and downs that we have seen in the equity market, for example, over the last couple of months, hasn't really affected the NOK. So, and we have seen foreigners buying into the Norwegian bond market quite aggressively, and there's no doubt that it has attracted safe haven flows due to the Eurozone debt crisis. So what should we expect from here? We have the Norges Bank meeting on Wednesday. I think it'd be a bit like a business as usual. They will note, of course, that the Eurozone debt crisis is unresolved, but that we probably have to move closer to some sort of solution. But they will also note that the Norwegian economy is actually stronger than expected. So we expect them to say that rates will be kept unchanged, but they will also indicate, not least due to the strong housing market, that eventually rates will have to go up, and that could actually happen as soon as December this year, but probably they will say it early next year. And we think there's a final leg for euro NOK.
And how has the euro dollar been performing before and after the release of the IFO data? And how do you expect this pair to be performing by the end of the week?
We did see a bit of recovery in euro dollar this morning when the IFO data were out. They were slightly stronger than expected, underlining that the Eurozone debt crisis has still not been able to drag down the strong German economy. Of course, it's sort of extend the move higher in euro dollar. We have seen since Draghi in July said that, believe me, it will be enough. We expect that euro dollar will hit 127 on a 3-month horizon, and we could test 126 on a 1-month horizon. And it's very much based on three, we could call it a sort of a three-legged analysis. First of all, we do expect that the Fed will engage in QE3 here in September, putting some that will weigh on the dollar in general. Secondly, we do believe that we will see a policy response from European policymakers. We do believe that Spain will ask for help, and that the ECB after that will start buying peripheral bonds in the secondary market, and then finally, we believe that will help risk sentiment. So also the risk channel will tend to push euro dollar higher, and also that people will be more convinced that China is actually in for a sort of recovery in 2013.
Now moving on to the Aussie against the US dollar, what is your outlook for this pair, and what should traders watch out for over the next few months?
I think one reason why the Aussie has been suffering this week, and also last week, is that there's a lot of concern about China and how deep the slowdown is in China. We think we'll get sort of a confirmation over the next couple of months that China is stabilizing, and that will help supporting the Aussie dollar. The same thing applies to the Fed doing QE3. When they do that, people will look for where can we get a carry. We can do that. We can get that in Australia, 3.5%, and probably that's priced maybe a bit too aggressive in the Aussie forward curve, they price something like 2 more rate cuts of 25 basis points. We're not sure that it's going to happen. So from a China stabilization point of view, price a bit too aggressive. The Aussie curve, QE3 in the US, and finally a bit of financial optimism. We actually think that buying Aussie dollar at this level is an excellent idea, and we have a 1 month target actually of 106 and a 3 month target of 108.
Thank you very much for sharing your targets with us today. That's all for today's Targets in Focus, but do stay tuned for more exclusive interviews from the TV team. Goodbye.